Hi traders, in this video we're going to be looking at the falling wedge pattern. This is a chart pattern that can be used to spot breakout opportunities in trending markets. First thing you need to do is to mark off support and resistance on your charts. As you can see, I've already done that here. I've marked lower highs for the resistance and higher lows for the support. And as you can see, where these two lines join, it forms a wedge pattern. Hence the name falling wedge. There is an opposite pattern to this one, which is called the rising wedge, which I've also done a video for as well. So what we're looking for is a breakout of the resistance level. As you can see, when this did happen, there was quite a substantial market move to the upside. This emphasizes the strength of this pattern when it's marked off correctly on your charts. The great thing about it is it can be used on any traded instrument or chart time frame. Here I'm using it on the euro-dollar 1 hour chart. I like this pattern because it implements price action analysis rather than looking at just historical prices or indicators that use all sorts of complicated algorithms. It's just simple price data, something that a lot of retail and institutional traders will be looking at, and that might be one of the reasons why you see such a big jump up here. If a few people had been, not a few people, lots of big players had been watching this particular setup here, it can lead to a self-fulfilling prophecy as a big move such as this one. In terms of money management for this particular trade, you could have placed your stop loss below the support level here, which would have been around 10 pips, which is a very reasonable tight stop loss for the 1 hour charts. If we would have entered on this breakout here, price went up almost 80 pips, which gives a very, very favorable risk to reward ratio. If you wanted to, you could have added further confirmation to this particular trade by placing a resistance level, the closest point of significant resistance, which would have been here. You can see that this also held up here. And you could have waited for price not only to break the falling wedge pattern there, but to break through this resistance level. So we've also got double confirmation at that point. Just bear in mind that this could have been a fast moving candle, so you might have wanted to place a pending order above either of the resistance levels. If you try to do a market execution, it might not have gone through depending on your broker or your slippage, the liquidity at the time of placing the trade. In fact, you can always use a pending order throughout the falling wedge pattern, so you don't even need to be at your charts waiting for the breakout. In this instance, you could come back to the chart on an hourly basis to move the pending buy order as the line of resistance changes. I prefer to use the 1 hour charts and above, as I find the patterns are more reliable on the longer term time frames. Anyway, that's all there really is to the falling wedge pattern. If you want to implement it into a very simple trading strategy or just use it as additional confirmation of other strategies that you may use, it's definitely something to look out for on your charts. Thank you for watching. Please like and subscribe for more.